Demand, yearly fiscal demand is growing fast towards 1,300, so 1.3 billion ounces. So there's a huge structural deficit in the silver market. And one day this will lead to a huge spike in the silver price. Why hasn't this happened yet? Well, many of the insiders know that these silver and gold prices are managed because of the selling of paper futures on the COMEX system, but now more and more of the trade is moving towards China, moving towards Shanghai. Even the future market, future trading is moving from west to east. In the not too distant future, we'll see a very rapid rise of the silver price. And actually, it could start any day now if you look at the market fundamentals.
Recent market movements and expert insights paint a compelling picture for gold and silver in the ever-evolving landscape of precious metals. Willem Middelkoop, a renowned Dutch author, investor, and financial commentator known for his expertise in precious metals markets and macroeconomic trends, offers valuable perspectives on these developments. Middelkoop's earlier prediction that gold would cross the $2,000 threshold and swiftly move toward $2,500 is unfolding. He posits that surpassing $2,500 will signal a new bull market in gold-related equities. However, recent market activity shows some volatility in this trajectory. As of the latest trading session, gold experienced a slight downturn, falling by 0.18% in the North American market. The gold dollar traded at $2,511 after reaching a daily peak of $2,529. The drop in gold prices was due to U.S. inflation data, which indicated a smaller interest rate cut by the Federal Reserve. A stronger dollar and rising treasury yields also contributed to the decline, making gold less attractive to investors seeking returns. Middelkoop's analysis indicates a potentially bullish outlook for silver due to a production deficit. He notes a shift in trading patterns from west to east, particularly in China and Shanghai. Current market data supports this potential upward movement in silver prices. Silver trades broadly from the 26s to the 30s, with a narrower consolidation between approximately $27.70 and $29.20. As of the latest update, silver was trading in the 28.80s, showing signs of an upleg towards the ceiling of the mini-range. Technical indicators, including a bullish convergence with the relative strength index momentum indicator from the September 6th swing low, suggest continued upward movement, potentially targeting the September 5th high of about $29.18. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
In previous interviews last year, I've said that I expect the 2000 barrier to be crossed, and then you could expect a run towards 2500 rather quickly. We're now in that run, but I also said to get a real bull market in the gold-related equities, I think we need to cross 2500, because then people are getting the message that this is a real new bull market and it's getting very serious. And people will see that the margins will increase quite a bit of the producers. They will see that there's a lot of extra free cash flow to be spent. You'll see a pickup in M&A, and that's starting already. Look what happened with Philo Mining and some of the other takeovers we've seen. I think we're in the very first inning of the structural new bull market in gold and gold-related investments. And it might take a little while to pick up full steam. Actually, I'm very glad that you tell me this, because it points to a very solid bottom for silver. And everything runs in cycles, and I think this is the worst we've ever seen. We all know that there's a structural production deficit in silver. Silver mine production, there are hardly any silver mines left because it's a byproduct of lead and zinc mainly. But if you look at total yearly silver mine production, it's just a little north of 800 million ounces. Demand in silver, physical demand, yearly physical demand is growing fast towards 1,300, so 1.3 billion ounces. So there's a huge structural deficit in the silver market. And one day this will lead to a huge spike in the silver price. Why hasn't this happened yet? Well, many of the insiders know that these silver and gold prices are managed because of the selling of paper futures on the COMEX system, but now more and more of the trade is moving towards China, moving towards Shanghai. Even the future market, future trading is moving from west to east. In the not too distant future, we'll see a very rapid rise of the silver price. And actually, it could start any day now if you look at the market fundamentals.
According to the Congressional Budget Office, the U.S. budget deficit for fiscal 2024 is projected to rise to $1.915 trillion, a significant increase from last year's $1.695 trillion shortfall. This makes it the largest deficit outside of the COVID-19 period. This 27% jump from the previous forecast of $1.507 trillion is primarily attributed to higher spending across several areas, including student loan relief, Medicaid, bank failure resolutions through the Federal Deposit Insurance Corporation, and U.S. aid to Ukraine and Israel. The revised budget outlook reflects concerns about the U.S.'s ability to manage its ballooning deficit. Analysts like Willem Middelkoop have expressed apprehension about the growing fiscal imbalance, suggesting that the U.S. must soon address this issue to avoid long-term economic consequences. Failure to manage these deficits could lead to higher inflation rates, negatively affecting U.S. investors and reducing returns for bondholders. Interestingly, neither Kamala Harris nor Donald Trump, two key political figures in the upcoming election, have made reducing the budget deficit a central point in their economic proposals. With both focusing on other priorities, there is concern that the increasing deficit could exacerbate inflationary pressures without immediate fiscal measures, posing risks to future economic stability. Let's get back to the interview.
I think the EU is so connected to the US that I judge this problem as a problem for the Western dollar-centered financial system. So if we have a huge problem in the US, we also will see a huge crisis in the EU. That also explains why the EU is teaming up with the US in a way which is getting harmful for the EU. I think some of the politics coming from Washington, the EU is supporting the US, is actually harmful for the EU. Look what has happened around the war in Ukraine. I'm afraid that the people in Brussels, our politicians, don't understand the geopolitics well enough, and they keep supporting the US because they fear to be independent. They don't feel strong enough to take their own position. The demise of the EU has been predicted many times. It hasn't happened so far. I know China would love to see the EU succeed and would love to see the euro succeed because they don't want to go back to the past where you had all these independent European countries. So the jury is still out whether the EU will survive, but I think it has to. The main problem I'm focusing on is whether the US will survive with the current, deficits which are growing and growing, and this will need to be fixed in a not too distant future. If you look for answers, it's always best to look at history. That's why price controls are not that hard to predict, because they've been used time and again in each and every situation where you have growing inflation. And you're on track to reach hyperinflation. But of course the US play a few tricks to survive. And actually that scares me most, because the US might be tempted to follow a scenario where a large conflict, for example with China, would be their preferred way out. Or there's also a risk that they'll use Trump as a fall guy. If he gets elected, let's make him the fall guy. It's very dangerous to point to more specific scenarios, because the future will always be different than you can envision. But we're clearly reaching a very dangerous situation where China is in crisis, US is in crisis, one could say. Japan is nearing an end game. And also the UK and here in Europe will face many very, very serious, maybe life-threatening problems in the next decade. So I would like to leave it there because it's too difficult and too dangerous to get into more specific scenarios.
Given the current state of the U.S. budget deficit and the potential for rising inflation, how do you think future economic policies might impact the value of gold and silver? And what role do you see precious metals playing in safeguarding wealth? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.